Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is a weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. At the start of June, prices peaked over both the upper time, currently 164.40, of the recent November 2020, April 2021 bullish Andrews pitchfork, and also the more important upper time of the October 2019 to February 2020 shallower bullish shift pitchfork, currently at 162.20. The market seemingly started to settle over the newer bullish Andrews pitchfork, but not so over the shallower bullish shift pitchfork. Yes, prices traded over it, but with a bearish or indecisive patterns throughout. Hence, I suppose it was no real surprise that we started to see a possible pennant formation over the last couple of weeks, maybe turning into a descending triangle of sorts, or even a wedge pattern. Thus, I placed the target X in the 152.25 area in case it is, say, a descending triangle type pattern. I was not wedded to the idea, but it was best to be prepared. Then last Monday saw a gapping move lower as the market forced the breakout of this descending triangle on the downside, below the April to date uptrend, currently at 162.30, which will be retired after this commentary, and its recent but now separate close partner, the short moving average, currently at 158.5. But last Thursday, the market had reached target X and stalled. In some ways, it was a gratifying stall, as it proved the idea of a descending triangle was a true idea, and once completed, something else would take its place. It was also coincident with the middle time, currently at 151.40, of the same recent-ish bullish shift pitchfork, the one that's broken. Then came today, a reversion back up and towards a significant downtrend from June high, currently at 158.40. This is an important downtrend, as it not only makes up the topside downtrend of the recent descending triangle, but it also is a three-pointer. It seems we'll be seeing the strength of the rally soon, when the market once again tries to test this downtrend. And as we sit today, we have today a combined key reversal up and bullish engulfing pattern, not to be sniffed at. London coffee. Okay, once more, just to recap the big picture. We had two sideways triangles in this market, one from summer 2020 and the other more recently since mid-March. The earlier one had a force break higher, the new one did not. I wrote 7 weeks ago, target X at 1537 is the preliminary potential target for the large sideways triangle. Target X1 off the chart at 1632 is the full potential target for the sideways action. All these depend on the continuation of the current break higher out of the sideways triangle. Since then, we've reached target X, halted, pulled back, then reasserted the bullish incentive, and 3 weeks ago reached target X1, which is now obviously no longer off the top of my daily chart, as it was previously. We've had some follow through higher, but then prices reached up and failed at the big 50% Fibonacci line of the February 2017 to April 2018 move at 1694, and in some style, with a huge key reversal down, closing below the middle time, currently 1685, of the early April to mid-May bullish Andrews pitchfork, which has been quite an interesting move. We've had some hesitation for about 2 weeks now, and it's starting to show strain on the market, as we're having not just intraday indecisive moves, but intraday indecisive moves, especially late last week. This last bit ties in with the pressure onto the combination of the lower time, currently 1609, and the rising short moving average, currently 1607. So far both have been penetrated, but we have not had any closes below, at least so far. This is now something to watch for, as it could become crucial very quickly. As I said last week, and I quote, "To be honest, I'm not that keen on the lower time. It failed at the outset back in late May, which makes it suspect as a support. Rather look at the April to date uptrend, currently at 1533, as being a classier support right now. The bullish Andrews pitchfork just looks too steep." End of quote. It looks that way still. In between now we have the early May high at 1557 and some congestion at 1536 to 1539, although that has given way when previously tested, surprisingly easily. Meanwhile, top side we have resistance from 1600 and 1640. Most of the good stuff between 1615 and 1625, which is where we've been testing in recent days. We have a key reversal up today, but only just, and it also looks like an indecisive doji cross. But it's very important, remember, it didn't close below the lower time or the short moving average, which is its partner, and the two combined together are actually quite a formidable opponent. So just keep an eye on that very, very carefully. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.